In today's episode, we're breaking down 4 massive moves reshaping crypto right now. XRPL quietly crossing $1 billion in on-chain assets. A new era of decentralized crowdfunding in a world full of geopolitical chaos. Tether stacking 140 tons of physical gold in a Swiss bunker. And DeLorean's DMC token ripping over 200% after Binance cut its perpetuals. If you think crypto is just about charts and memes, stay tuned, because these stories show where real power, real money, and real control are moving next. Let's start with XRP and the XRPL ecosystem. XRPL has now surpassed $1 billion in on-chain assets, driven not just by XRP itself, but by an influx of stablecoins and tokenized real-world assets using the ledger as actual financial infrastructure. This is a big shift. Instead of XRPL being seen only as a payments rail, it's becoming a base layer for real economic activity, where institutional capital and real-world collateral are starting to live directly on-chain. Out of this growth, a new narrative is forming. Don't just hold XRP and pray. Platforms like Sol Staking are offering AI-automated staking and cloud mining contracts, where XRP and other assets can earn yield daily without manual trading. Sol Staking is run by a US-registered company, uses segregated customer funds, is audited by PwC, and holds insurance through Lloyd's of London, aiming to look and feel like an institutional-grade yield product rather than a degen farm. The twist is that returns are backed by off-chain real-world assets, AI data centers, sovereign and investment-grade bonds, physical gold and commodities, industrial metals, logistics infrastructure, agriculture, and clean energy projects. These assets generate cash flow in the real world. Then the results are pulled on-chain, where AI-driven smart contracts handle daily settlement, payouts, and risk rules automatically, giving XRP holders a way to stay active while the network scales. Next, let's talk about crowdfunding, because the old model is breaking. Traditional platforms like GoFundMe have been criticized for opaque custody, high fees, and even freezing or blocking funds for humanitarian causes, including campaigns tied to Gaza and disaster relief like the 2025 Los Angeles wildfire fundraisers. Users are asking a simple question. If you can't audit where the money sits, who controls it, and how fees work, why should you trust it in the first place? Decentralized crowdfunding flips that model. Instead of trusting a company, you verify on-chain. Funds are traceable, smart contracts automate refunds if targets aren't met, and anyone with a wallet can participate without banks, payment processors, or politics in the way. This becomes crucial when geopolitics interfere with money flows, like US military and economic pressure on Venezuela that disrupts export markets and financial channels, or renewed US strategic interest and tension around Greenland. In those environments, blockchain-based crowdfunding using Bitcoin or censorship-resistant stablecoins gives people a parallel rail, global, permissionless, and resistant to sanctions-driven choke points. Multi-chain infrastructure, decentralized identity, and AI agent coordination layers are emerging so that campaigns can run across Ethereum, Solana, and L2s with verifiable milestones and automated governance, making decentralized crowdfunding not just ideological, but operational at scale. Now, to one of the wildest stories in stablecoins. Tether has built what's described as the largest non-sovereign gold hoard on the planet. Roughly 140 tons of bullion, worth about $23 billion, stored in a Cold War-era Swiss bunker. The company has reportedly been buying more than a ton of gold every week, enough that traditional bullion desks now have to factor Tether into their liquidity calculations as a systemic player. Tether is framing this as a hard asset hedge against fiat debasement and counterparty risk, aligning itself with the same macro narrative that has pushed gold above 5,000 and kept Bitcoin near 88,900 and Ether around 3,000. For crypto natives, the message is simple. Behind USDT and Tether Gold, there's now a bunker full of metal, a physical answer to the constant question, what really backs your digital dollars? But there's a double edge here. On one hand, physical reserves can increase confidence. On the other, a single private issuer accumulating that much gold introduces new concentration risk and adds to long-running concerns about transparency in stablecoin reserves. Either way, this move shows how far stablecoin issuers are willing to go, into literal nuclear-era bunkers to signal resilience in an era of synthetic dollars and regulatory pressure. Finally, let's jump into DeLorean DMC, the official on-chain token of DeLorean Motor Company, which just rallied more than 200% right after Binance removed its DMC perpetual futures. After a derivatives-heavy launch through Binance's Alpha program in 2025, unresolved incentive issues and futures exposure created heavy selling pressure and distorted price discovery from day one. When Binance and later other venues removed DMC perpetuals, leverage started unwinding, volatility spiked, and many assumed the token was done until the community stepped in. Long-term holders twice bought into extreme dips, and the token quickly rebounded, with observers comparing the moment to GameStop-style episodes, where aligned communities overpower short-term derivatives flow. Behind the ticker, DeLorean has already launched an on-chain vehicle marketplace, enabling real car sales, on-chain ownership, and ecosystem participation, making it the first major car manufacturer to bring native vehicle commerce fully on-chain and to run a live token listed on platforms like CoinMarketCap. The DMC episode raises a bigger question for the industry. Are we listing tokens into derivatives markets too early, allowing leverage and incentives to dominate, instead of letting spot-led, community-driven liquidity form around real fundamentals and products? So, when you zoom out, these four stories connect. XRPL's $1 billion milestone and AI staking, decentralized crowdfunding in a world of sanctions and platform censorship. Tether's 140-ton gold bunker and DeLorean's 200% rally after cutting off perps all point to the same trend. Crypto infrastructure is growing up, and control is shifting from centralized middlemen to programmable systems, hard assets, and coordinated communities. If you want more deep dive breakdowns like this, hit subscribe, drop a like, and let me know in the comments which of these power moves you think will matter most in the next bull phase.